Hey guys, it's Nick. Another day, another Tesla $5 billion secondary offering. He just did one in September for $5 billion and he's already coming back to the well to make hay while the sun shines, I guess. If I was him, I would do the same. Why not 10 billion or 20 billion? The market initially reacted down, but being where we are in this crazy market and the crazy Tesla fanboys, it's actually up on the day, if you could believe that. These days, I actually can believe that. So here we are at what, PE 1300 or so. Who's even counting anymore? What difference does it make, right? He could go back and do a secondary $5 billion offering next week, and I think nobody would blink an eye, and the stock would probably be up again. This is just an indication of how crazy this market got, but I also want to show you what's going on behind the scenes to give you an idea that Wall Street is not your friend, and neither are these banks and these analysts and all this stuff, and I'll tell you why in a second. So Tesla today opened at 625, went as low as 618 on this news, and is now $648, up $6 on the day, when Tesla shareholders are going to get diluted again with this $5 billion secondary offering. PE ratio, you know, a conservative 1300, which means that you're willing to pay $1,300 for every $1 in earnings that Tesla gives you. Okay? But nobody's looking at that. Nobody cares about that. They just care about the great story, right? And just to show you that people have the memory of a fly, just 6 days ago, December 2nd, Goldman Sachs equity research said Tesla to buy on better long-term sales outlook and margin expansion, blah, blah, blah. We raise our Tesla to buy from neutral and raising our 12-month target to 780 from 455. Wow, that's awesome, right? Look at some of the comments here. In other words, sell. And this guy, The Truth, who is actually speaking the truth, because on December 3rd, he said a huge Tesla secondary is on its way. And of course, 6 days later, a secondary is announced. And by the way, who might be leading that secondary offering? Oh, I don't know. Let's take a look. Tesla is working with a syndicate of banks, including Goldman Sachs. Coincidental? Yes, the same Goldman who upgraded Tesla from a neutral to a buy. Yeah, shocking, right? And guys, this is why you should never listen to analysts, because they're not trying to make you money. They're trying to make themselves and their clients like Tesla money. Now, if you and I did something like this, the SEC would parade us out in a perp walk and call it a pump and dump, that somebody pumped up a stock right before they were unloading it. But when somebody like Goldman Sachs does it, or does it on behalf of their client, then it's totally okay, and there's nothing to see here. Move on and just shut up and take your dilution and wait for the next secondary after we upgrade it again to a strong buy, maybe in another week or so. So guys, look at this secondary offering and this Goldman upgrade as a reason to never take anything Wall Street or analysts or banks say at face value, because there's always an ulterior motive, and they're making their money off your backs usually, because they are in early, they are pumping these things up, and then they are selling at the top to everybody. Now, I don't fault Elon Musk, because if people are willing to pay these prices, these crazy prices, and are okay with these secondaries, he should do more and more of them, because the more money he puts in the bank and he doesn't have to go and borrow through selling bonds or anything like that, the better position Tesla is in the long term, and more money they can invest against their competitors to get a competitive advantage. So that's good for him. It may not be good for stockholders in the long term. Tesla is almost like I don't know, it's like a crowdsourcing company or something like that. It's basically a GoFundMe for the idea of electric vehicles. And people are loving it. They love the idea. He makes more money selling stock than he does actually making money, earning profits on sales of cars at this point. So he's going to keep doing it while he can. People don't care about the dilution, it seems, because the stock just keeps going higher. And if you're willing to pay a PE of 1,000, what difference does it make if the PE is now 1,300 or 1,500 or 1,800? Nobody cares. Nobody looks anymore. Nobody even remembers that Goldman upgraded the stock just a few days before they're the lead underwriter for a secondary offering of $5 billion. That's how crazy this market's gotten. Proceed with caution, guys, because when this bubble pops, and it will, there's going to be a lot of pain out there, a lot of people losing money. So don't buy into the hype of Tesla. It's not going to go up forever. What goes up so high usually comes crashing down pretty quickly. So keep that in mind, and don't listen to what analysts say, because they have ulterior motives. So I hope you like this video. Give me a thumbs up if you do. And thanks for watching, guys. I'll see you on the next one.